Today, I'm going to walk you through step by step and show you exactly how structure flows and builds. Watch carefully, you'll see how simple and mechanical this process really is. And stay with me until the end because I'll share a shortcut that makes it even easier. Now, if you're new here and you've never been through this structure that I'm going to share today, it's going to open your eyes. Now, this is a totally mechanical structure. I'm going to show you now step by step how you apply this and you can start using it from today. But if you hang around towards the end of this video, I'll also share a tool that you can use to automate the full process. So this concept is understanding candles on a candle approach. And this is why we have the candles to walk through now step by step. So you understand the process each and every step. Now there's two different ways we look at this. We have a bullish and a bearish market, and there are two different ways you will look at marking your structures up. But we will go through both bullish and bearish directions so you understand how to fully apply it. Now I'm going to use arrows today to show you exactly where and how you'll mark out your areas on the trading range, your break of structure, your highs and lows, so it's all very clear. We'll start over here where we first have this move to the upside. We create this pivot low right here. So this is a pivot low where we start to see price moving to the upside. Now what creates this as a valid pivot low, and I'll mark it off now so you can see, is this candle closing down below this previous candle's low. This is crucial to understand this step, because without understanding this, you will not understand how this works. Now, as the market continues to push higher and higher, we wait for the same sequence to close down. We see that on this candle, closes below this previous candle's low. So I'll mark it out again with a arrow above. So when we see this candle closing below this candle's low, that validates this is a valid high. Now, what this gives us is a current trading range. And we'll have a range from this high to this low down here. This is our current trading range at that point in the market. Now we validate this by using the close down candle when we look back and we see the close down candle from the high. This is when we're in a bullish market. Now the sequence when we're looking at a bearish market is going to be slightly different. And we'll do that, and we'll start now from over here to the right, and then we'll walk our way through this full price action step by step. So when we're looking for a valid low and a high to be formed in a bearish market, we reverse what we just did and we look at the valid close up. So when we see this candle here, I'll mark it out, closing above this candle's high, closing bullish, this creates a valid low. And I can mark this low here off as a current valid low in the market. So that is your low of the current range you're in. Now to find your current high, we do the exact same thing. We look back to last time we see a close up, and that is on that candle right there. It closes above the high of this candle. This candle fails to do that. This becomes your valid high. So from the highest point, you mark a level. This is from this high to this low is the current trading range you're in. Now, once you have your current trading range, this is where you can start to use your concepts to find your trades. You're looking for the continuation, but you also got to understand that these highs and lows can be ideal areas of external liquidity where we can see the market sweep those areas and reverse very quickly. Now, in the later part of this video, I'll show you this automated, and you'll see how this works in real time where these markets can sweep those and reverse completely. Understanding this concept, when you're in a bullish market, you're looking for the candle to close down to give you a valid high, your valid low. When you're in a bearish market, you're looking for the close up to give you a valid high and valid low. It is important that you don't mix these two up. It only goes with those bullish and bearish signals when you're using these candles for closing up and closing down. If you do it the wrong way around, it will mix everything up. And that's why you'll find this tool I've created that you'll find out soon is going to help you avoid these mistakes. So now you understand the process, what we're looking for. Let's now actually go through and we'll mark this up and go through it step by step, reading exactly what's happening. So we know this is our current low and this is our high. Now over here to the left, we've had some kind of break of structure at some point. Let's say we've got a previous high here and we see this as a break of structure. So the market is broken here to the upside. Let's name this as a BOS in the market, right? So we're naming this a BOS That'll do. Let's enter. So we have a valid break to the upside. Once you see a valid break to the upside, that is when you can look back for the last close down to mark out your valid low. Remember, once you have a valid break of structure, and for a valid break of structure, you must see a candle body like this closing the level. This wick through is not a valid break of structure. So once we see this valid break, you can look back to find your valid low. Remember the sequence. You're looking for the next close down. This forms your valid high after the break of structure. So once we see this close down, it creates your valid high. That gives your trading range where you're looking for the pullback to an area. Now we have some internal liquidity at these lows. It gets swept and then we run higher again. And you're looking for that continuation of that bullish trend. So again, what you're looking for is this high, and what we class this as is basically a weak high in the market. But it becomes a new break of structure. Once the market closes through with this candle with the body close, it creates a new break of structure. And we do the same thing. Now we're looking, after we see the break here, we look back for the last candle that closes down. This candle is the last one that closed down. We look at the lowest point and we can mark it off as a valid range low. So there becomes your current range low. And we do the same thing again. This becomes our next closed candle to the downside below the low of that candle. Remember, it must always be the previous candle's low, it closes down, or the previous candle's high, it closes up. So when we see this candle closing down, that can be drawn as a valid high. Now we know when we the opposite way to a bearish market, you look for the close up, but this is how we find the low here to this high of that current trading range. So now you have the next bullish move after the break of structure. And when the market comes back, you're potentially looking for an area to hold, to run higher, to break structure again. Now, obviously, we never know when the market's going to shift. Now, if, say, for an instance, we have a higher time frame area of supply here, this could be where the market's pushing into supply and we see the reversal out for trade. Now, that is something you can learn much more of and take your trading to new heights inside the 90-day program. Now, there is a link in the description of this video if you want to learn more on that. So when we see the market eventually coming down here, let's grab this level, we can identify this becomes a new break of structure. It was originally a strong low in the market, but when the market closes through that level, as we see with this candle, it becomes a new bearish break of structure. This now shows there's a full shift in the market. We've gone from a bullish market to a new bearish market. And as soon as you see the close down, that is when you can look back for the last close up. Now it happens to be this close up and the same high is drawn as your range high. So very often you're going to find the reversal point will be the same high from the previous bullish swing to where you see the break to downside. Now the only time it wouldn't be is if we saw this candle closing up above this candle's high, then this would have been the high where you'd have your new range high. And you'll see this in live markets when you see the markets moving. Now, once we have this break of structure, we look for the next close up, which gives us the close up here above this candle's high, creates the valid low. So we have our trading range from this low to this high. Now, as we have this candle pushing into what we call an area of imbalance here, it leaves its own imbalance where the market pushes back into, holds within this candle, and then we run back and we break structure once again. So now we have the same process and we've broken to downside. So we've gone from a bullish bias to a bearish bias. And once you see this candle closing down, what do we do now? We look back for the last close up again. This candle basically closes above the high of that candle. Now for the low, we used it when we closed above this one, but when we're looking for a high, we're looking for the last close up, which is this candle. And then you can mark this off as your current high. And you continue with the same process. You're looking for the next candle to close up on the move down to create your valid low to give your new trading range to the downside. That is it. That is how this structure is applied to your charts mechanically over and over. Very simple to do once you master it, but it can take a long time to do. It is very tedious. There's ways you can muddle it up and get it wrong, which I do find a lot of people do struggle with this sometimes. So what we've done, we've created an indicator for TradingView called the companion trading tool, which will automate this for you completely, and it will mark every single break of structure, high and low, on your chart to make it much faster, give you more time to take your trades, and it frees you up for your trading. So let me introduce you to the structure companion tool. This is how it's going to look in your charts. Now I have set up for myself, so it's very basic. I just want to see the previous break of structure. So the last two breaks of structure, my current high and my low. So as you can see here, we have a previous break of structure was bullish to the upside on this daily time frame, and the last one was to the downside. We have this is a current strong low in the market, and this is a potential weak high which hasn't yet formed. Now once it forms, but I just went through the first part of this video by understanding when we see the candle closing down, you'll see that will create a solid line. So we go into these candles closely, and I'll tell you about these colored candles in a moment as well. So when we see this candle here, we'll go through just like we did a moment ago. When we see this candle breaking and closing through this level, creates a break of structure. What do? We look back, we're bearish, we're looking for the last candle to close up. And that is this candle right here. So mark this off. This becomes the valid close up. There's our highest point. That becomes our new high in the market. So as the market continues to push down, what we look for is the next close up, and that would be this candle. And I'll mark it off. This would have been a previous range low. So we just make that solid so you can see it easier. So you can see the process. The indicator will plot this instantly. You haven't even got to think about it. And that is the advantage of using this tool in TradingView. Instead of trying to work out and do it yourself, which you can do, of course. I'm not saying you've got to buy this, but this is going to make your life so much easier. And when we look at the continuation, let's just go through these steps again so you can see how it works. We come back, this is a sweep of a high. So we didn't break through, just a sweep. And on a lower time frame here is where you can capture an entry on a strong move down on the lower time frame, understanding this was just a sweep. Since then, the market came back up, and what do? This candle right here, it actually reverses and makes a new break of structure. The indicator will automatically draw this. And don't worry, I'll go through a replay mode in a moment and show you this live. And once we have it closed through, we look back for the last close down. Where's that last close down? Well, it's that candle right there. This candle closes below this candle's low. The lowest point from the breakout becomes our new low in the market. And currently we don't have a valid high. And that's exactly how this indicator will plot all this for you. Now, if we just go down to the next time frame, a 4-hour time frame, we can actually remove all of this on here because that's those drawings we just had. Now, if we look at what's happening here, we can see the same thing. We can see where we have a break of structure. We have a close down. Previous low would have been down here. Let me just mark it off. Why is this the previous low? Well, because we had a close down from the breakout point. This is the previous low. We had a nice area of demand down here. We had a sweep as well, the low. A reversal candle expecting price to run the high. We get this. Eventually we run higher of a new break of structure. We look back for the last close down. It's this candle. We create our current strong low. Then we create the high. And this is where I was saying about the sweeps in the market. We have a close down on this candle, creates the high. We have a nice big sweep. So we had a big bullish candle at that point. And this was news, manipulation in the market. And then we have a big push back down. Now, what's important here to me is understanding these candles are also drawn for you in advance. These are previous open imbalance candles. And right here, I can mark it off. This imbalance is currently held price. So we've pulled back into this imbalance, failed to close through to continue lower, and we're having a reaction with a big outside candle. So if we now see the same thing and we see this getting closed back bullish, then we'll expect price to run through and break the week high. If we hold here, then we look to see if we can run back through to continue lower. Now, there's ways you can understand all this inside the 90-day program, but that is something completely different. I teach you the concept step by step, everything from market structure, supply and demand, imbalances and liquidity. The actual indicator has many different functions, which we can go through step by step. But today, really what I want to show you in this video is how you can actually automate what I teach in this channel, or you can apply it yourself manually. So if I just now remove all this off again, what we'll do, let's actually go down to 1 minute time frame, because many people think this isn't going to work on a lower time frame, and let's get rid of those previous drawings. So now we're on a 1 minute time frame. Let's go back and I'll show you how this works. Let's go to replay around here. And now we can follow this indicator step by step. So currently we can identify we've just now broken through. So where would we expect a new low to be placed? We would expect a new low to be placed right here. So if I go forward one candle, there we go, instantly this converts to a break of structure 1 minute. There is our new low plotted and our current potential weak high. That's how fast this indicator will do this for you. No messing around, no waiting. You can instantly see your levels, know exactly your current trading range, and you can work with price better and faster. So let's fast forward this. Let's actually keep it at 10. We'll fast forward it now. You can see this working in light. So we had a bearish push down, continuation. You can see how quickly this will reverse and show you the direction. Now, this is just 1 minute time frame. You would obviously use your higher time frames and your lower time frames for your entries. But this is just showing you how this tool will work. So a very long-term range here. Price is not broken out. Long-term range. And eventually we broke to downside. And then we reverse back up. And this is how the 1 minute chart is so choppy for you. If you're just trying to trade this time frame, you would be all over the place. Now there's a way we can also use this tool. Let's stop this right now. You can see how it's working in live conditions. Continuation up. You can see how this level moves with price as each candle closes. Now we can actually look to use this tool and we can add on extra indicators at the same time. And what this will do, if I go now to a 5 minute, I believe, it will plot the higher time frame levels for you. So not only will we see here our 5 minute break of structure, our 5 minute low, it gives you a 30 minute low. It gives us our 30 minute break of structure, our 4 hour break of structure, and even our 4 hour low as well down here. And above you'll see your 30 minute high, okay, and it'll be a 4 hour there at the same place because it's current highest point in the market. So the tool will have different uses, and you can also turn on and off these imbalanced candles. Many different things you can do with this. That's the tool, how I use it. Now, you don't have to get this, but it's something you may want to automate your own trading. Obviously, go back, watch the first half of this video again. It goes through step by step, everything, how you apply this mechanically to your charts. This is the structure that you only need because it is mechanical. Many other structures are not mechanical, and it is going to make your life so much easier once you start plotting your structures this way. Now, if you want to see how I combine multiple time frames with using this tool as well, then do check out this next video coming up. It's going to help you to spot how I use it.